Welcome to Talk Tickers. Today, we're diving into SLB's impressive fourth quarter earnings print from January 23rd. The stock popped on the news, and we're going to break down exactly what got investors so excited.
All right, let's get right to the headline number. SLB delivered an adjusted earnings per share beat of 4 cents. Now, a solid beat is always a great place to start, but trust me, the real story here is what's happening under the hood. And as you can see, it was a clean sweep. SLB beat on both the top and the bottom line. Revenue came in almost $200 million ahead of what Wall Street was penciling in. You know, this is the kind of all-around beat that really signals broad strength across the entire business. Investors absolutely love to see this.
So let's dig a little deeper. What exactly drove these results? And maybe just as important, how did the market react when the numbers hit the wire? A few key things really fueled this beat. First off, that new ChampionX acquisition is already paying off big time, adding a whopping $879 million in revenue. That helped power a huge 26% jump in their North America business year over year. And on the tech side of things, their really high-margin digital business just crossed that critical $1 billion mark for annual recurring revenue. Okay, now this is where things get a little more nuanced. It's really a tale of two different earnings numbers. While the adjusted EPS of 78 cents crushed expectations, the official GAAP number was actually down from last year. So what gives? Well, the difference is all about one-time charges from their recent merger. And the key takeaway here is that the market decided to look right past those temporary costs and focus on the much stronger underlying performance of the business.
And this chart just says it all, doesn't it? It perfectly illustrates the market's enthusiasm. Trading volume on earnings day just exploded to 43.5 million shares. That's nearly 3 times the average. This wasn't some quiet drift higher. This was a high-conviction stampede into the stock.
And on top of those great results, management came out with a powerful signal to shareholders. They're planning to return over $4 billion through a mix of share buybacks and a newly hiked dividend in 2026. That's a huge sign of confidence in their future cash flow.
All right, so that's the quarter that was, but now let's look forward, because this strong performance flows right into management's super confident outlook for the year ahead. And honestly, this is where the real investment story starts to get compelling.
The CEO, Olivier Lepech, he set a really clear tone on the conference call. He basically said, hey, those challenges we had in 2025? They're not just behind us, they're actually about to become the very things that drive our growth in 2026. A classic headwinds to tailwinds story.
And of course, they backed up that talk with some solid numbers. Their formal guidance for the full year is targeting revenue right around $37 billion and adjusted EBITDA approaching $9 billion. I mean, these numbers show continued, steady growth, and they give investors a really predictable foundation for the year.
But the real sizzle in their growth story? It's coming from two high-tech areas. First, that high-margin digital business keeps up its strong momentum, and it's getting a boost from new AI platforms. And second, get this, their data center solutions business is growing way faster than anyone thought possible. Management is now targeting an incredible $1 billion annual revenue run rate by the end of the year. Just wow.
But beyond all the official numbers and forecasts, there's a wild card. There's this huge opportunity that really dominated the analyst question and answer session. It's a major geopolitical catalyst that isn't even fully baked into the company's guidance yet.
So here it is, Venezuela. SLB is in a totally unique position. They are the only major international service company still operating on the ground there. We're talking about almost 100 years of history, active facilities, local teams. They are ready to hit the ground running and ramp up operations at a moment's notice. And historically, this was a $1 billion a year market for them. Any further reopening of that country represents a massive step change opportunity that the market, it's only just starting to wake up to.
Okay, so let's tie this all together. Let's look forward and figure out what this all means for the stock.
So you've got this solid fundamental performance, you've got strong returns to shareholders, and you have this massive geopolitical catalyst just simmering in the background. So the question is, how do you position yourself for what might come next?
Well, here's our take. The stock has already run up a bit, partly on these Venezuela hopes, so just blindly chasing it might not be the best move. A more strategic way to play this is to focus on that catalyst. You could think about using long-dated call options. Now, these are basically contracts that give you the right to buy the stock at a set price in the future. It's a way to capture that massive upside potential if Venezuela reopens, while at the same time defining your exact risk if it doesn't. And all the while, that solid fundamental story, which led analysts at Stifel to raise their price target to $52, well, that provides a really strong floor under the stock.
So based on the solid operational beat, the aggressive capital returns, and this significant and we think underappreciated geopolitical catalyst, we are initiating our rating on SLB as outperform. This company is just firing on all cylinders, and it comes with a truly unique call option on top.
This analysis is for informational purposes only. This is not financial advice.